Hello and welcome, fellow backholders. This is Get Rich or Die Backholding. I'm Simon, and today we are going to introduce ourselves to you to give you a quick overview about who you're dealing with, what this channel is all about, how we all started investing, and stuff like that. So for that occasion, we prepared interview questions for each other, and Robert, why don't you take it away?
Yeah, before we get to the more interesting questions, I will start off with the usual very boring question to Mois. Um, and that is, what is your career? What have you studied so far? What are your goals in the future? And how is this all connected to investing?
Yeah, so after I did my normal high school, I did a bachelor's degree in business management. I think it's called. Sometimes it's called business economics. Um, the correct translation is probably business management. And now I'm doing my master's degree in finance, accounting, um, controlling, and taxation. It's like a mixture, but it's mostly finance. And actually, my interest in investing started pretty early when I got like 18 or something like that, and I got access to my savings account, and I thought, man, those low interest rates, that just makes no sense leaving the money on the bank. So I had to look for alternatives, and I thought about different assets, and yeah, that's what led me to stocks.
Okay, maybe then also a follow-up question. Could you imagine doing something totally unrelated to business management and economics and stuff like this in general? And if so, then what?
Yeah, sure. I mean, I could imagine doing something finance related. I don't mind if it's not investing related, because I feel like your career is more about generating cash flow and not about I don't need to be in the investing world like for my career to do it on the side. So I feel like I could do something like controlling, maybe accounting. Even as boring as it sounds, you could get around and generate some cash flow and maybe switch it up a little, switch jobs every few years. I don't know. I'm pretty open minded regarding my career. I don't have like
Okay.
fixed plans at the moment.
Then I have a question regarding Wall Street and the investment community in general. And that question is, what do you think is the biggest weakness of Wall Street and the investing community, and what are you doing to not fall into the same trap?
Yeah, I feel like Wall Street has like these like some kind of bubble problem. I mean, I'm just everyone has his own bubble, I think, but Wall Street especially. Um, you could see it in like I think it was 2008 or something when the iPhone came around and everyone was using their Blackberries. So sometimes you just have to look at what's popular. You have to look at people, what their opinions are about things, and I feel like you should expand your bubble and get different opinions and just search for like sometimes it's best to look at the exact um, opposite opinion of what's your investment thesis. So I feel like it's mostly about getting the bigger picture.
So then, what you're referring to sounds a lot like I think it's Buffett called it a circle of competence or something like
Yeah,
that.
sometimes you have like some small edge compared to Wall Street, and you have to use that. For example, I'm
Okay.
pretty.
Very,
I would kind of call myself a gamer. Like not anymore, but my childhood, and I have a small edge in the gaming industry. I think so. It makes sense to invest in some gaming stocks just for me.
so you need knowledge
Yeah.
advantage before considering investing in the sector. Okay. Um, I have very similar approach to you. I mean, because we are brothers, most of you may know that we also invest mostly together. Um, now let's get to the next question, which is regarding if there is something in your investing career, if you can call that, um, that you are very thankful about learning. Could be I don't know, some kind of mindset or value, something that you got through investing.
Um, I feel like, which is like the most important thing I learned in the early years of my career, if you can call it that. Um, I feel is you have to believe in yourself and your competence in regard like getting things more accurate than the market. Like sometimes you have a different opinion than the market, and it's okay. The market makes us. The market is not efficient. Like you get it. In your university, people say like the market is efficient and stuff, market efficiency hypothesis, and that's simply not true. The market is not efficient. So you have to believe in your thesis, and if it's like just a little bit more right than the average market, you can make money off of that. So I feel like this is like the main point, and I feel like the second point is like just I don't know, just try it out, and just learn by doing. So like I don't know, it's more like it's like a practice you learn, and along the way, it's not like you read a lot of books and then you can do it right away. I don't know. I feel like there's more to it.
Yeah, basically like every other craft
Yeah.
out there that you need to do it, learning by doing. Then my last question is regarding role models. Are there any role models that you have, people that you look up to in the investing world?
Uh, yeah, sure. I think everyone has one. I think, but my go-to would be like Peter Lynch, I guess. Maybe a more modern one is like Kathy Wood from Mark Invest. I feel like those two are the ones who reflect my investing style the most. But there are a few pretty interesting ones like Bill Ackman for activist investing. But I I can't like name like one or two which are like my idols. I feel like there are so many people you can learn from. It's more like if you focus on a particular investment style, there are a few people you could look up to, and I feel like Kathy Wood and Peter Lynch are the two I would just refer to.
When talking about them, what are you using them for, so to say? Do you use them for screening, or do you use them for getting a specific mindset or something like that?
It's more about the mindset, I guess. Sometimes you can just look at their funds. For example, Kathy Wood's ARK Invest or ARK G Genomics Fund or whatever, and you can just screen for some companies you might think are interesting and take a deeper look into them. But I feel like it's more about getting the feel for how to structure your portfolio in a way.
Then that's it with my questions, and I guess Simon has a couple more.
I do indeed. So yeah, first things first. Do you remember your first trade you ever took? What was it? What year are we talking?
Yeah, I mean, it's hard to forget. My first trade was actually Tesla. We both just decided, like, low interest rates. What are we going to do with our money? Now we're just in total control of our own financials. So we just decided to basically YOLO it all into Tesla, you could say. But it wasn't really like this long-term play. I feel like it was more like just get a feeling of how the stock market works, and maybe just try a swing trade, I would call it, because Tesla was trading between like 200 and 300 all the time, and we just entered at the perfectly wrong time, bought at like 310 or whatever, and it immediately went down to 200, 300, 230, I guess. It was pre-split everything, and we just hold everything. We held everything, and then it went back up, um, and we actually sold at 340, I guess, and made like a 10-20% profit off of that trade. But I'm thankful that Tesla didn't just straight up went to the moon at the time, because otherwise I wouldn't be in Tesla right now. But yeah, we just bought back in after we sold like 1 year later, or I don't know. So it was kind of lucky, I guess, but in a way it was, I don't know, just first experience.
Right, I see. And so, kind of an opposite to that, what was the worst trade you ever took? And did you pinpoint any mistakes which led to the trade failing?
Yeah, they actually like two I would call. I could remember. I feel like Wirecard is one of them. For the like those people who don't know about Wirecard basically just went bankrupt because they had accounting fraud. $2 billion, just billion euros went missing, and like overnight, the company just disappeared basically. I knew all about that. I knew the risks. I didn't know that the risks were like so huge. I don't know, but I felt like that this is the reason because the stock was trading so low. So you gotta take those risks to earn high returns. Um,
Yeah.
Maybe the biggest mistake was to oversize this position. It was a little bit too large compared to the
Hmm.
portfolio in general. But I mean, I learned a lot from this trade. I lost like 70%, I think, but thankfully I didn't lose everything. But
At which point exactly did you enter? So was that before the accounting
yeah,
fraud got announced? Right.
yes,
So
it
you
was
didn't
like
know at the time. Yeah. Okay.
I actually knew that there were like some rumors. Like there was a short report, I think, about Wirecard, and I especially took the trade because of those rumors. I knew if there's like
Okay.
the slightest possibility that those rumors are invalid, not true, then the stock would just straight up go to the moon. And yeah, I mean, like sometimes it just doesn't work out.
Sure.
The second trade is maybe more interesting, I think, and maybe more like um, even worse, I would call it.
Hmm.
I actually bought some puts at the bottom in March when
Hmm.
we had Corona and stuff. Um, I feel like um, I held them too long. I actually made a decent profit of them, um, but it was like a crazy time back then, and I felt like the market is going to go much lower than it actually did, and so I lost a few percentage points of my whole portfolio, but um, I felt like which drove me into this position was like this kind of thinking that the market owes you something because you felt like you missed the major drop, and now you the market has to drop even further, so you get like a piece
Yeah.
of the pie, I guess, and you have to let go of that. So I just learned it in a harsh way.
Yeah, I think that is something that many investors struggle with, like mostly on the long side, obviously. So that is basically common knowledge when something is, yeah, or when we experience a bull market or a huge run in something, even more people get into it because they have this FOMO, fear of missing out, and so you kind of expect it the other way around with going short then.
Yeah, sometimes you have it when you go long, and sometimes when you just go short and you just miss the major drop, then you're left behind basically.
Yeah, yeah, true. So, did you ever did you ever like invest in a different style or approach than you do nowadays? Or has it always been long-term investing and DCF modeling?
I guess it was just trial and error and just trying to get to the style which fits you the most. And I tried different a bunch of things. I actually traded some options, like I said. I traded some ETCs like commodities and stuff,
Hmm.
stocks like stocks on different exchanges, not only US stocks and European stocks. So I did a bunch of things, but I felt like um, stocks were the safest and like the easiest to learn at the moment at the time, and then I just stick to it. And now I'm still like trading mostly stocks, and like sometimes I leverage my positions with options, but it's mostly stocks at the moment. So I don't know. I feel like you just have to get a feeling for different instruments and just get to feel like what's right for you, and you can make a decent amount of money even from options. It's not like you get scammed all the way.
Yeah, exactly. Yeah, so kind of a follow-up question on that. Do you plan on diversifying your investment approach in the future? Maybe like go into real estate or even building a new business or something like that to like kind of get a little bit away from stocks and other assets like that?
Yeah, definitely. I feel like real estate is kind of a no-brainer if you get get a loan from the bank, you basically get it for free. Sometimes you just have to pay something up front. So I think this is one thing I will look into once I started. Once I got a steady career. Um, I want to get into options a little bit more, especially leaps, long-term option contracts, mostly calls, just to lever my positions even more. Maybe a little bit more into CFDs. I know you are more like into those kind of instruments. Maybe you
Yeah,
can teach
yeah,
me something about that. Um,
sure.
I feel like you can just do so much. You have to start with one instrument and then just extend your horizon step by step. It's not like I want to try everything at once. I noticed if I try everything at once, it's just too much. So once I kind of mastered stocks, I guess, then I will go into and options. I will just try different, like, more things. Regarding
Yeah,
businesses, I feel like this could turn into like the largest passion for me. So if I ever get the opportunity to start a business or be part of one, I would gladly take the opportunity. But at the moment, I feel like there's no idea, or I don't know, business model I could just make into a business. So I don't know. Maybe in the future.
yeah.
Who knows?
Yeah, thanks for all your answers. Fair point. I completely agree with you on that. You should actually just focus on mastering or get decent at something before you branch out into too many different things, because at the end of that you will only be a master of nothing. So I kind of like your approach on that front. All right then. So next we're going to interview Robert. Morris, why don't you start with your questions?
Yeah, sure. My first question is also a boring question. Um, what got you in investing in the first place?
Um, this may sound funny to some people who don't really played many games before. Um, I guess I could say it was you, because you started investing a few days before I started. But I guess I was always trading inside of games, for example, in FIFA or in different MMOs. Um, but I always enjoyed it a lot, and I actually traded more in these games than I actually played them. So at the end, I was playing the games not for playing the games, but for trading inside of the games. I also made some kind of little money with these games. So that's what I guess started for me, like my investment journey. But it was always this kind of prejudice when people talk about stocks and investing in general, that it's very very risky and so super complicated. Um, so I wasn't really considering it until I turned, I think, like 20 or 21, which is now like 4 years ago.
And which resources did you use to just get a basic feeling for investing? And did your like university knowledge help with that, or just tell me something about what you did in university? What's your degree and stuff?
Maybe first, I studied like you, business economics, um, and finished my bachelor's degree. Right now, I'm working on my master's thesis, so I will also have my master's degree very soon in finance, or management and entrepreneurship. Um, it's like my specialization. So I already got the right background to get used to stocks and to understand everything pretty fast in comparison to somebody who doesn't have that background. Um, but I guess actually most of my knowledge I got from reading books, watching YouTube videos, and stuff like that, and the internet in general. I think the internet is underrated. Most people, they know that the internet is powerful, but it's like a huge tool that everybody should use, no matter what you're wanting to learn. Um, so I would say for me, it's I read a bunch of books, watched a lot of videos. There's like one guy I really want to give him a shout out, and that's Dave Lee on investing, because his whole approach is so long term focused, and so he is so humble about everything, but his knowledge is very in depth. I would say there's not one other YouTuber on the same level in like long-term investing in stocks. But sadly, I discovered him like 1 year ago or so. So most of the time I was watching other guys and then just sorting them out with the time when I figured out, okay, they are not very mm, knowledgeable, like, and they don't go that deep into the stocks, and they are only looking at on the surface.
Yeah,
So yeah,
I
that are my
definitely agree on that.
resources.
I feel like the internet is like opens up a whole new world for upcoming investors, and it's not like you have this huge information advantage anymore. Like institutional investors don't have this edge compared to the retail investors. Um, Maybe do you have any tips for upcoming retail investors?
I guess like the most important thing is just get started. And at least a paper trading account didn't do it for me because I had like no attachment to my investments, to my stocks, because they are not real. But even if you put like a little amount of money um, into some stocks, then you will feel a different kind of attachment and will be very emotional, especially in the beginning. And there's like one advice that I kind of like. I think it's take a little bit of money, put it into a very volatile stock, and to find out how much it hurts you when the stock is going down, and how much you love it or how excited you get when the stock is going up. Because overall, you try to um, have no emotions when investing, and that it shouldn't affect you that much. And if you realize, okay, like it hurts me a lot when the stock is going down, even if it's only a little bit of money, then you should pick your stocks very carefully and stick only to stocks which are not that risky at all.
On maybe a follow-up question is and how do you cope with stocks that like just don't do well? What is your mindset?
Yeah, that's a good question. I actually like it a lot because I think you're learning more from your bad trades in comparison to your good trades. Um, because for me, it's like when the stock is going down, then it kind of tests my conviction in the stock. If I'm really convicted and convinced that the stock will turn out like very well, then I might even add just to cost average down. It's a huge opportunity to buy something which you already liked before, but now you can get it even cheaper. So I'm not going to say no to that. Um, but if you start to think about like the company and I think like maybe it's not that good, or I need to do some more research there and there, then that also sometimes shows me, okay, I have some knowledge that I'm missing on this company and I need to research more. So when the company is going down, if anything, um, I research a shit ton until I know the company very, very well. And if I'm still convinced that they will turn out um, to be like a good investment in the long run, then I will add even more.
Fair enough. Um, and which stocks performance are you in the regarding the future most excited about? Is it still Tesla?
Some people would laugh at me, but I would say Tesla is a very good term, very good long-term investment over the next 10 years. But it's not the stock which I think will make my portfolio perform very well. I think these are other stocks, basically stocks with a market cap between like 1 or 5 billion. So I got especially 2U in my mind, because education is very underappreciated, and so is the stock at the moment. So this is one stock, and the other one, which is above like 5 billion, I think right now at like 8 or 9 billion, and that's Lemonade. I think especially Lemonade has like a huge addressable market, and people underestimate this. They don't see it. They just look at some multiples and say, "Nah, it's way too expensive." But very good stock always seems too expensive, and so did Tesla back in the day. And when looking at what people wrote in their books, also what Common Stocks, Uncommon Profits from Phil Fisher, he also wrote about that. That the right stock always seems way too expensive, and so you're always afraid to get in, and you are waiting for the dip, and sometimes the dip may not appear. So yeah, these are my two stocks I'm most excited about so far, but there are a bunch of others that I'm
Yeah,
also looking
definitely
at.
agree on Lemonade. On Tuyu, I don't know. I might disagree. I feel like it's might be a slow rising stock in the future, but the total addressable market is so huge. But I don't know. Maybe future videos will just clear it up. These are all my questions. Simon, do you have any questions?
Yes, I do. So at first, same question I asked Morris. What is the worst trade you ever took and why did it fail?
I think because we're doing everything very similar, it's the same mistake as Morris did. One time Wirecard. I only regret that I looked at the short report, but I didn't take it that serious. Um, I underestimated the risk, and but I think with like a lot of research, with more research, I would have recognized that the risk is too high in comparison to the report. So that was my bad. I should have just researched it even more. Underestimated it because there are so many stocks that just get shouted at by short sellers all the time. So I'm kind of used to that, and it's hard to find out which if short sellers are right or not. So that was one mistake, and the other one is also puts doing March and the Corona crash. Um, Basically, it started that we bought some puts as a hedge, and quickly they grew way too much, and so it was super oversized position in our portfolio overall. Um, but I was too attached to the puts. I was too convinced that the market is not going to recover quickly, and that's not going to be a V recovery. But yeah, it turned out to be otherwise, and the market returned indeed
It
very
did.
quickly. My puts were dying, um, so was my portfolio for a little while. But I think I learned a lot, and the main takeaway is just if you want to have a hedge, then you also need to reallocate your portfolio and take some money out of the puts and put it into some stocks again. Um, and don't try to time the market. At least for me, that never worked, and because of that, I'm also sticking to borrowing long-term buy and
Yeah,
hold investing. So yeah, that's my
sure.
takeaway.
Okay. So you talked a little bit about your degrees and what you're doing professionally. Did any of these experiences, be it university or internships you did in the past, um, help you in any way regarding investing? Like, did you have any takeaways from that front?
Yeah, for sure. The first time is about the Tesla trade that we had, or Tesla investment, because we are holding it very long term. Um, and I was researching a ton about Tesla, and I was already very, very convinced. It was my biggest position in my portfolio, maybe like 12% or some 10 to 12%, something like that. Um, and the only thing I was thinking about even more is similar to Wirecard. There are a lot of short sellers and a lot of people who you think are very intelligent in a way, and they are betting against the stock. So I was thinking maybe they didn't do any research, or who knows? Maybe they are right. So that was the only doubt that I had. But when also talking to the people at BMW, um, yeah, they were also not seeing Tesla being successful, and the one guy also told me, they're never going to be profitable. And to be fair, at that point, I also told him, no, like, didn't you see like the last quarterly report? They have been profitable in the last one, and I think this trend is going to continue, and they will be hugely profitable in the future. But these people, they only looked at the surface and then were thinking, nah, it's automotive business. They're not going to do it. Very, very unlikely. So that was something that I learned.
So it's,
Even the professionals, they are very
yeah,
biased
I
in a
was
way.
about to say, it's like just
Um,
because of protection or like underlying fear about their own industry and jobs kind of way. So obviously it would be better for BMW if Tesla would not succeed. So that might be a confirmation bias on that front.
yeah, for sure. Also, I have to say that just increased my conviction.
I get that. Yeah.
So I felt very, very sure about the investment at that point. Also continued researching, and also I actually cost averaged up with the time. Um, then this is one thing, and the other thing is I worked with a collaborative robot, cobot in short form, and I compared a lot of different companies, and I talked to the suppliers of BMW to find out which one is the best one. And I also looked up all the companies. A lot of Japanese companies are there, KUKA, German company, some Scandinavian companies too. But I was never fully satisfied with like any company. Maybe sometimes the product was good, but not like awesome, just like good. But then when I looked at the financials, then it was over for me because not enough growth, or very, very unprofitable, and no clear path to being profitable. So yeah, that's something I think is very important, and people underestimate too. You should try to have an edge in the companies that you are investing in to really deeply understand them. And if you don't, then try to
Yeah.
diversify a little bit
All
in
right.
this sector.
So from what I know, your portfolio is very heavily based around U.S. stocks and the U.S. market in general. What's the reason for that? And is there any other market in the world that you are interested in, or where you see potential in the next couple of years? Could be a whole region like Europe or Asia or something, or just a particular country. Basically, is there anything else to look at apart from the US, in your opinion?
So when thinking about right now, I got like 11 stocks in my portfolio, and four out of those are not U.S. stocks, and some are in Israel. One is in China and one in Poland. So it's not completely U.S., but you're right. The focus is there because most of the innovation is still in the U.S. China's huge economy, but the real innovation is still in the U.S. for some reason. China's not advancing very much there. They are still just
Yeah,
copycat in some ways. Um, so I stick to US. Then it's also because of the language. I don't speak Mandarin, so very hard to do the research, and that's also the reason why I only got one company there. Because just very draining always to do something with like DeepL or Google Translator. They're very annoying and hard. The research is also of worse quality in comparison to the research I can make for US stocks because I actually speak the language, so there's no language barrier. And looking forward, I think everywhere are opportunities, especially in places where people don't look, because always where it's darkest, there's a lot of money to be
yeah,
made in a way, because nobody's looking there. I think of like Latin America or India. Like people totally underestimate these regions, but there are for sure some companies that are very good, but that nobody's looking at because they're inside of these regions. So I think go where you have an edge and where you speak the language and where you can research well, and you will be able to find something everywhere. So um, keep your eyes open all the
yeah.
time.
That's actually a good point. Like another example of this is Denmark, which has been the best performing European market in the last 2 or 3 years. But nobody looks at the stock market in Denmark because it's just so small, and like I couldn't even name a Danish publicly listed company right from the top of my head. So, but yeah, obviously there's
Yeah,
something going on there, and it would be worth a look. So yeah, totally agree with you on that one.
I think especially when talking about Denmark, also what I was talking about earlier, the cobots. The company that I also looked at was also actually Danish. So
Yeah.
yeah, I kind of feel you there.
So last question then. What would be the top three attributes a company must have in order to convince you to buy into it?
I think like very important is of course that there's like a lot of growth um, during the next years or even decades. Then the company doesn't necessarily need to be profitable, but there should be at least some kind of clear path to profitability over the long term. I actually like it if they are not that profitable at the beginning, because then the stock price is kept artificially low, because people can't really see the future, and I don't know, a lot of people are missing fantasy, and they just look more at the current things and not really in the future. So, but yeah, a path to profitability is important. Um, and then you should have a moat, like you should be in some way superior to your competitors. So that's very, very important, maybe the most important thing, especially if you have like a huge time, because then the company can grow a lot over the long term, more than anybody or more than most people can imagine. And if I want to make it a very big position, then the management team should be invested too, and they should be some kind of geniuses in their own way. Um, Also, they will have some flaws, but they should be executing very good. Yeah.
Okay, yeah, thanks for all your answers. So I guess that leaves me then. So yeah, shoot your questions along.
Okay. Yeah, I'm going to start. First, like one question: what makes you excited to start this little venture with Morris and me, and to start a YouTube channel? And maybe tell us a little bit about what you have done before on YouTube channel, social media,
Yeah.
blogs, and stuff like this.
So first things first, why am I excited for this? Um, Investing or like finance in general has been the hobby I pursued for the longest time now. It all started in 2011, so it's almost 10 years now, and I've always kept going with it, and still have this passion I felt from the first day. But it's very hard to find people who are similarly invested into this hobby, let's call it. Just because I feel like many people don't really realize how important it is, and what possibilities can arise when you do it right, or when you do it long enough. And obviously, losing a lot of money is very stressful, and that keeps many people away from doing it to begin with. So I know that you're both passionate about that. You've been into the markets for a couple of years now, just like I have, and I think that we complement each other in our skill sets. So you are very keen on investigating the companies and analyzing them on a deep level, and then doing your DCF and everything. And I have always been more like short to midterm trader, focus on technicals, or like fundamentals regarding the whole economy in the world and in different regions. So I feel like that our skills get fit well together. And yeah, the other factor is we can divide the workload into three, which makes everything much more feasible. So that's that. Which leads me.
Yeah, before you go on, I want to give you the same back. I think you're very, very passionate. I'm very happy to
Thanks.
have you on board.
Appreciate it.
Looking forward to everything
Yes.
that's going to happen during the next month and years.
Yeah.
So
Yeah, me too.
yeah, go on.
So yeah, regarding your first point, what did I do on social media? Always kind of have been interested in this whole kind of field, because this whole notion of make money online, you don't have to do your corporate job for 40 years and stuff like that. That was something that's stuck with me from the very early stages. I don't even remember when I did my first YouTube channel. I think it was like something like 2010. I was still living at my parents' house at that time, and it was a channel dedicated to drawing stuff and tutorials in that field. It's pretty trash, obviously. I had no equipment, no nothing, and I did not know enough to make decent videos. But still, I managed to pump some out that got some K of views. Like the best performing one had 78,000 or something. So even though I didn't pursue it further, I knew that there was something going on at YouTube, and that it was very much possible to achieve something there. yeah, I didn't do YouTube for a couple of years after that because of too many other things going on. And then in 2018, I started with a blog, which is focused on explaining the whole finance world in, let's call it easy language, in order to make it more accessible to people in our generation who should really think about their finances and how they're spending their money, but don't do it because they feel like this topic is too boring and too complicated and everything like that. So I kind of try to centralize my knowledge in one place because from my family and my friends I got the same questions over and over again. And I just decided to write some blog articles and just link them to them whenever they asked me stuff. So yeah, I did that for a while, but as you can imagine, writing blog posts on a weekly basis is very time consuming as well. And I'm working full time. I'm studying on top of that, and yeah, doing a project like that on my own was just yeah, not something I could do forever. In 2019, I did a podcast format, which I built a YouTube channel around then as well, where I interviewed CEOs and founders, entrepreneurs of different fields, mostly regarding general business topics and business consultancy kind of topics. That's resting for the moment as well, but I'm hoping to get into that at the latest when my university degree is finished and I have that time which I can use for my hobbies.
Very, very nice to hear about that. Also something else now, you told us so many things about YouTube and all your side projects, and
Yeah, I
you got
do.
many. Maybe tell us a little bit about your actual career, like
Yeah.
your main job.
So I'm a banking professional. I started, like I said, in 2011 with a traineeship as a banking professional with a local bank here in Hamburg. And after that, I switched to Comdirect, which is a subsidiary of Commerce Bank, and did a lot of different positions there, from customer relationship management to customer support agent to business development and innovation management to deputy team principal and all of this kind of topics. So I learned a lot. I did a lot of different things, met very interesting people during the course of the 4.5 years I stayed there. And then, yeah, in 2019, I decided, so I had some other jobs, but only for a couple of months, so that's not really worth talking about. But then the major shift was in early 2019, where I decided to leave the bank side of the table, so to speak, and switch the table sides and move into consultancy. So that's what I'm still doing to this day. I'm a business consultant at a rather small company that is focused on IT and banking and finance. And so I still get to use my knowledge of the finance world and consult banks and financial institutions in different projects.
Yeah, very nice. I mean, that's often also very beneficial because you got a lot of contacts and people we can talk about certain topics or sectors in investing.
Yeah, exactly. And
So
also, being a consultant and doing your job on a project basis means that you're staying at one place for a couple of months or maybe a year or two, but you always know upfront that the time there is limited and that you get to experience another environment in the future. So I can stay at my company where I'm very happy, but I still get different inputs from different environments and projects. And so I was just able to scale what I was able to see in the business world, and that was kind of one factor why I wanted to do that.
okay, very, very nice. So that we got that done. Maybe now, how did you start to invest, and what was your
Um,
starting point?
yeah, so I can't really tell you what was my first trade. Don't even remember the first stock I ever held because I started kind of from the other way around. First thing I invested in 2011 was binary options, which is a very very risky way of investing that is now banned in the European Union. So you kind of get the picture there. But yeah, very early on, I decided to always take a little bit of the money I earned from my traineeship and invest it into the markets, not only to be able to make some gains, possibly, but most importantly to learn. I'm the typical training on the job guy, so learning just with some books to read is very difficult for me. I need to experience stuff for myself, and I knew that I had to learn how options functions, how an option price is derived, what the beta is, how funds worked, and all these kind of things for all my exams I had to do in my traineeship. So that was just one way to of me thinking, I'm just going to throw some money at the screen and experience stuff for myself, and then at the end I will save myself some topics that I need to learn. And yeah, I made some profits here and there, but mostly I made losses just because it's just too risky, like I explained. And also the so-called brokers were a scam for the better part of it. So it's quite good that it's regulated now. And after that binary option adventure, I got into CFDs, which is still risky, but less risky. And there are more suitable brokers that are regulated by the EU or in London and are generally trustworthy. And then after that, I got into funds and ETFs. And only then, after doing all of this, I got into my first stocks. And so it has been a long journey with basically all instruments you can think of.
Okay. Then one question is regarding your reverse trade, and then the other question is, what is the trade that you were always thinking about doing, but that you somehow missed out?
So my worst trade, I think I have to name two. The first is similar to yours, the March drop of 2020. I missed out on the drop, and similar to Morris, I felt like the market owed me to go a little bit further down. But it wasn't not only that, I was just so convinced that the fundamental outlook of everything was so bad that there was no logical explanation why the market should rise above a certain point. And it was very textbook-like. We had a sharp decline, and then we had a decent recovery. And so I looked at the charts, I looked at the Fibonacci retracements, for example, and all of these other indicators, and I was very confident, there's a resistance level, there's the next one, and with each resistance level, I kept increasing my short position a little bit. And yeah, obviously, my shorts started to die, like you put it earlier, and that was very painful. So yeah, in terms of raw numbers, that was definitely the worst period of performance I had. Emotionally, I think I have to name another trade that was in 2012. It was Facebook's IPO. So back then I was still in traineeship, earning around 650 euros a month or something. And I bought some CFD long contracts before the IPO because I was very convinced that Facebook was going in a good direction and that the whole concept was good, that Mark Zuckerberg knew what he was doing. So I wanted to get into that as soon as possible. What happened was on the day of the IPO, the Nasdaq had some sort of technical issue and started opening half an hour later. And by the time it opened, I was already stopped out because the initial stock price was so much lower than it was expected. So my stop loss triggered and I lost the equivalent of 1 month's salary, which jeopardized me quite a bit. I had to ask my parents for some emergency funds for that month, so that was very annoying and something I am not proud of. But it also, kind of taught me a lot, obviously. So just emotionally, that was the worst trade to this day. And yeah, regarding your second question, what did I miss out on? Oh, there are so many things. I mean, you miss opportunities every day just because you can't monitor everything. And even if you would never have enough money to play every play there is.
Then maybe something that you actually looked at a long time, but that for some reason you just skyrocketed, then you decided to not enter it anymore.
I guess
Something
I
like
have to
that.
go with Tesla because for a very long time I was sort of a Tesla skeptical. Just because when looking at the traditional way of looking at companies, what you quickly find is that you shouldn't buy something just because it's hyped, and that hype is mostly a bad indicator. And sure, profitability, PE ratio, all that kind of stuff. And it was still in the early stages, so it wasn't very obvious that Tesla was going to succeed because you all know the story. There was a time where Tesla avoided going bankrupt by just a couple of days. So I was skeptical at first because the other way around, I was too convinced that this German auto market was not going to let Tesla be successful. I just imagined them to go on the offense much sooner and much more decisive than they actually did. So I overestimated them. I think that is the right way to look at this. So I traded Tesla here and there, but like I said, I'm always short-term focused. So I traded them, made a couple of percent, sometimes even 10 or 20. I also traded Tesla short successfully twice, but I was just considering it for those kind of swing trades for a couple of days or weeks maybe, but never really in the long term. And I only started investing into Tesla with a long-term mindset last year. So I'm very late to the party.
Okay. Then maybe something which we haven't talked about that much yet. When I talk to you privately, I very often listen to the frustration in your voice when we talk about the knowledge and awareness about finance regarding a lot of people, especially in Germany. Maybe if you got only like one advice that you would like to give them, what is it?
I think it's just look at compound interest and how that is working. I mean, this whole notion is so remarkable. Exponential growth is the key word here. So if you don't know how compound interest works, just look it up. It's really amazing. And if you read the stories about that, for example, there's this Josef Pfennig story. So in English, it would be Josef Cent or something. It's basically a mind game. When you imagine that Joseph, the father of Jesus, in the year zero invested just $1 into something that granted him an annual return of 5 to 7%, he would now, in the year 2021, look at several thousand of world globes made of pure gold. So that is the amount that he would have now, and that is just exponential growth. In the textbook example, it's just beyond imagination. So really investing over a long period of time, 30, 40, 50 years, is going to make a huge difference. And even if you might feel you don't have enough money on your hands to start investing, all those little amounts, like even 50 euros a month or so, can make a difference in the long run. And you can always find 50 euros if you want to, like just party one weekend less, and then you're basically done for. So
Yeah, that's basically it with my questions, but
Yeah,
Boris
sure.
has a few more.
You actually answered some of my questions already. So I was going
sorry
to
about
ask
that.
you which instruments you were going to use, but maybe we could just talk about what would you do differently regarding your Facebook IPO trade? Would you still use knockouts, or would you just straight up buy shares?
I probably would buy shares now because you don't really know what is going to happen on the first day. Like we've seen this with recent IPOs in late 2020, for example, Airbnb, just from the get-go, huge valuation, where we all said, okay, like we all like Airbnb, but at this valuation, we're going to hard pass this. So you don't know what you're in for, basically. If you really want to have that company, just buy it on the first day or the second day. There's no need to go in beforehand with certain contracts or something. What I experience is quite often after an IPO, the price drops quite a bit. So that is mostly a good entering point if you want to hold them from a fundamental perspective. Just try and catch that. Or if you want to hold it long term, then it's not going to make a huge difference anyway. If you buy it on the first, second, or third day, just do it.
Yeah, sure. That would be my approach as well, I think. Maybe we didn't talk about portfolio structuring. So could you
Right.
tell us about your, like, how many stocks are you holding at the moment? How many stocks are you planning to hold? What are the weightings and stuff like that?
Yeah, how many stocks I'm holding is quite a good question. I don't know for sure. I'm holding a few stocks directly, so I think that is about 8 now. And then I have my Wikifolio, which is kind of like a fund that I manage for my own. It's an Austrian startup named Wikifolio. It's a social trading platform where you can basically create your own fund and invest in it. So I'm holding a lot of stocks indirectly by holding my own Wikifolio. And then I have some money in ETFs just to lower my risk and diversify a little bit more. So yeah, and then I have some stocks of the company I work for. So yeah, it's probably in total, like not counting the ETFs, of course, but in total maybe 30 or something. And in terms of general portfolio structure, there's no right or wrong answer of what is a good allocation. You just have to figure out what works for you and how you feel comfortable with it. For me, the goal is to have like 10 to 20 positions, which would mean 5 to 10% of the portfolio for each stock, depending on how confident I am about the stock. But that's generally what I feel comfortable with.
Yeah, I kind of feel the same. Sometimes I feel like diversification is somehow overrated. I feel like if you get it above like amount a certain number of stocks, you just it's just too much. It's just too much to handle and too much to research. And I like to stay below 15 for my
Yeah,
personal preference. And I feel like sometimes you can just oversize one position. Just if your conviction is high enough, you can get like outstanding returns in the short term.
absolutely.
Sometimes in the long term. Yeah.
I also do
Maybe.
that, but
Yeah.
when I do that, I try to challenge, like similar to what you guys referred to earlier in the conversation. I try to challenge myself very hard. Why it is a good idea to go above my threshold of 10%, what the risk is, and I basically challenge myself to find good arguments and bad arguments for that thing. And if I convince myself, then I sometimes go above that. Yeah.
Do you have like a percentage where you don't go like above when your position keep on growing?
Um, I think I never went above 20, and I would rather not do that in the future as well. I feel like if you have 20% of something, you could only have 5 of those. Like it's very hard because it's just a too large egg in one basket. But yeah, like I said, personal preference.
Yeah.
Obviously,
Yeah.
it would have been a good idea to invest in Tesla early enough and have more than 20%, but you never know. So, yeah.
Yeah, I get your point. Yeah. Um, Maybe like what is your end goal regarding investing? Do you have like certain plan, like a goal of x amount of dollars saved up to retire, or something like that?
I don't have a certain amount of dollars or euros I want to achieve. It's just that I want to achieve financial independence, meaning I want to be able to quit my job at any point where I feel it's necessary, or just don't worry about money anymore in any shape or form. Like if I want to do a vacation for 3 months, then I'm just going to do it. Or if I need to take another investment, buy some rental properties or stuff like that, I want to just be able to do that without like having existential fears if I do things like that. And yeah, basically, it's just I don't like other people having control over me and how I go about my life, because for all we know, we only have that one life. And I feel the only person who's going to dictate how I'm living it is going to be myself. So what I need for that is enough money to be able to yeah, to have that leverage in arguments, let's say. So that's the goal.
Yeah, I feel that. I definitely feel that. Um, Maybe to finish it off, what's your future trend you're looking at, and you think which might be the next big thing?
It's so hard. I mean, there are so many things going on. I think that automation is still in the very early stages, and I think that this is one of the more relevant trends, because I strongly feel that many jobs will get replaced in some form because it's just going to be automated. I saw that also while working in the banking industry. There are still so many processes that are being done manually by physical human beings, and it's totally unnecessary. You have things like robot process automation and other kinds of things that are taking slowly but steadily taking over. And this will just going to continue. And sure, there will be other jobs and other like job profiles that will emerge. So it won't just be jobs lost, it will also be jobs gained. But the skill sets will be very different. And I think in the long run, humans will just be there to think creatively and conceptual, because that is something that robots and computers can't do at the moment. And I think it will still take a lot of time until they are able to think creatively. And yeah, you just have to prepare the workforce to adapt to those changes. And if you don't do that, then you will have huge discussions and potential disruption and social unrest in the society in general, because, you know, if you have a couple of millions people without a job and without a purpose, that is like a ticking time bomb, for example. So I'd really appreciate it if we have some society discourse about how to go about these things. But sadly, it's not happening. So yeah, I'm very interested to see how this is going to play out. Right.
That's it, I guess.
Yeah, I think so too. Thank you both for your time, for all the questions you prepared, and thanks to you for watching the video. We are hoping that this gave you some overview over our personalities, our backgrounds, our approach, what you can expect from our channel. And yeah, make sure to subscribe, like the video, and we'll see you in the valuation videos very soon. Bye bye.
Bye.